29th of May, and this is the third module of the pre-HGSI Summit in South Florida. Thank you all for attending. You are probably all muted, and since I know you put yes, I know I'm not muted, but should I become muted, I'll be watching the comment box if you guys can't hear me. There was some chatter on the Gil Morales board today about the difficulty in using HGSI, and there's no question. It is not the most intuitive program, but once you get able to use 10 or 20% of it, it'll be more than enough to justify why you have it. And as you get further along in your HGSI journey, I hope that you utilize much more than that. The purpose of these events is to try and level the playing field, and I'll make more comments as we go on. That's why you have me. All right. So disclaimer, you've seen this before, educational purposes only. I'm a doctor, not a broker. And although I love HGSI and I'm friends with the team, I'm not an owner of it. I pay for the software and all that stuff just like you do. So I feel, and you'll see at the meeting, I don't feel that I have to only talk about one product, although I know many of you are coming for HGSI. But I don't use only one product, and I don't think that anybody necessarily uses one product. So hopefully we'll show you how we can use HGSI as sort of the intelligence center, and then we use other tools to help us. Again, the objective is to prepare you for the upcoming meeting. I want to level the playing field. I've invited all the attendees of the New York meeting to participate. There is a chance that George Lee and I will be doing George Lee and I will be doing a meeting in November around the Las Vegas Traders Expo. That will be a different flair. That'll be more like the New York meeting, which was maybe less HGSI and a lot more George, who did a great job of teaching us the various things that he does. And George and I, we're good buddies. We Skype a lot. I'm an HGSI animal, and George, I'm trying to make into one. George and we find the same stocks. We may get there in different ways, and it's a lot of fun comparing notes with George. And I know he's joined us today. And when I do the Vegas one, if there's a pre-meeting sessions, I'll invite the people from New York and Florida, even if they're not participating in that one. I like to not leave people behind. My ultimate goal is that when we get to the live meeting, it's about trading and not about teaching you how to use the tools. Now, I've done this long enough that I know that it'll be teaching the tools too, but hopefully we can reduce the amount. I'm going to send some more videos your way over the next week to help you on that as well. Housekeeping. Based upon popular demand, and it was the right thing to bring up, I'm just posting the free seminar and my weekend reviews for the time being in the Dropbox. So just please remember, you don't have to remove them. You need to copy them. And what I would do is I would create a folder on your desktop, and then every day or two just copy from the Dropbox to your desktop. Today I gave you a gift. I got the gift from Bob Meager, who's the official HGSI ThinkScripter extraordinaire. They'll have a lot of scripts that Bob has created, some he created from George. And I placed those into the Dropbox as well. I'm not sure we're going to have a chance to go through how to use them today, but we will. Those that know Thinkorswim, I'll show you some shortcuts as well. I'm finalizing dinner on Saturday and Sunday. I have a feeling we're going to do the barbecue at my place on Saturday and then the dinner out on Sunday, just because nobody wants a large group on Saturday night. Either way, the barbecue is, spouses are welcome at no charge. The group dinner, that won't even cover my cost per person, but at $80 it gets close enough if you want to bring a spouse or another person. The attendees are covered. Again, spouses are at no charge for the barbecue. Upcoming webinars on the 5th, I'm going to go over the warehouse view, which will probably be in depth because we have to spend some time on filters and views and in combo ranking. The 12th, I plan on doing the charting module, and then the 16th or 17th, we'll do one on HGSI lingo and putting all this together. I'm pleased that for those of you who responded to my email about if you're having issues with the rooms, let me know. I got them to expand the list, but I'm not sure I can get anybody more at the cheaper rate. So you'll notice 17 names there, I think. One room is a double, so that means 18 of you are staying at the hotel as of right now. If you are in the top 5, that means if you're Jim, Matt, Louis, Steve, or Joel, then you may have just gotten your hotel arranged today. If you were unaware of this, except for my emails, please call and confirm and switch to your credit card and off of mine. I don't do these to make money, but I certainly don't want to be chasing down credit cards. But they caved to my begging and pleading. So I think most of you are okay. Robert, on the bottom, we still got an issue on you. I've been emailing you back and forth, but hopefully we'll get that straightened as well. A lot of comments came to me. Jeff, thanks, Brad. Jeff, why do my lists of stocks look different than yours? And I guess I could have said flexibility breeds confusion, but I thought I'd be nice and say flexibility breeds variation. It happens every PV meeting where somebody will announce that theirs looks different than the one being presented up front, and I get that. So here's some of the reasons why things may be different. Filter. If you are using the program and something doesn't look right, odds are you've got a filter in place that's hiding things. So for example, if you have a filter that says no indexes in it and you're trying to look at industry groups, you're probably not going to see anything there. The second thing is some of my views are different than the standard views. My wife will love this comment, but I actually have a new computer coming on Sunday, on Monday rather, when I get back from ASCO, and I'm going to make it a straight, basic setup of what you will have from downloading, and then I'm going to build my customized stuff into that, and then I'm going to share a backup of that with all of you, so those that want to will be able to make your setup exactly mine before the meeting starts. I think that way we'll eliminate much of the confusion, and then you can do with it whatever you want. I've got a few ideas how best to deliver that to you, and we'll take care of that. I may just stick a backup file in the Dropbox, but I'll let you know when I do that. Options for indexing. And the option for indexing is down here. You can pick market value, price weighted, index weighted, all kinds of different index. So I played around today, and I'm going to use on this computer market value weighted. In my other computer, I've got price value weighted, and I'm going to try and figure out which one I like better before the meeting comes in. But reality is there's a lot of opportunities to be different. The other thing is start date. I don't know how much the start date matters, but I got a fast computer, so I go back 2 years. It's not necessary. I used to go back 26 or 52 weeks, and I'm going to, again, it's one of the things I'm going to be testing on the other computer to see if it makes a difference. I put a 2.5 and 150,000 share index filter in here. Now, I haven't even looked what happened because I also had a no indexes in there. I didn't want them to use the indexes for creating the index. So that might be different than yours. You might be clicked here at $5. And I don't like deferred index building. Deferred index building is if you have a slower computer and you don't want to wait for it to index before you look at your charts. It only indexes the groups that you look at. I just index all at the beginning. I have changed these today. When I do my weekend review, I will put up the index options that I'm going to go forward with. I decided I wanted to play around. I only got 8 notebooks on my desk, so I've got different things going on with different ones. But I want to get that cleared up in my mind so that when we do the meeting together, and if you subsequently watch my weekend reviews, we'll all be in the same place. The other thing that matters is the timing of the last update. I believe they have 4 updates now. And, first off, this is almost a shout out to George. The first update, which comes around 7 o'clock, 6:30, sometimes as early as 6 p.m. on the East Coast, is a price update for the day. There's 2 or 3 more updates that come in. They have earnings, they have fundamentals, they have corrections. They get a raw data feed, and then they do a lot of work to clean it up, and that's why there's updates. Probably the best update is the one that's sitting on your computer when you wake up in the morning. So if I've updated, since you've updated it, it might look different. So I'll make sure when we do our meeting in Florida that we all update it at the same point in time and that we're all on the same global index options. The ranking module is what we're going to talk about today. It's perhaps the least sexy part of the program and probably the least used. But every time I do a program on the ranking module, I start to think I need to be using it more. Let me give you a little bit of history behind the view that you see. Then I'm going to go through a couple other concepts and we'll jump into the program. One of you asked for some history on HGSI, and George Roberts, who's the proprietor of HGSI, will be at the meeting, and I'm going to ask him to talk a little bit about the history. I'll tell you what my history view is. Back in the 90s, there was a company called Telescan. That's where I met Ian. It was way ahead of its time. It was a BBS before we even knew what the internet was, and they went bye-bye. But they offered us searching and views and a lot of the things that HGSI has. At the time, George Roberts had an index program where he had a license from O'Neill, and he created group structure that I used to use in AIQ and Metastock. When Telescan went defunct, Ian Woodward, who is the brains behind the HGSI investment world, plus Ron Brown, who joined a few years later, a guy named Gary who had Quotes Plus, which was a data company, and George created HGSI. Much of what HGSI looks like today has evolved over time based upon requests from the users and development work by Ian and others. Back in the early days, we used to be all excited about group rotation. And we used the ranking module as a vehicle for showing us from a relative strength perspective, and I'll go through the various options in a minute, how we could rank indexes. And then we also learned, or groups, that if we right-clicked on any of those indexes, we could drop down to the stocks and we could rank them on the same vehicle. So if you are a high relative strength believer, and if I don't make you a believer in high relative strength by the end of this journey, then I haven't done half my job. But we're big believers in relative strength. Then you'll see why looking at the industry movement based upon relative strength is important. We did this so we could front run IBD's industry groups. And before they would update theirs, we wanted to know what they were going to announce as the top 5 or 10 groups so we could start fishing. And on Friday, I think they call it your weekend review. When you download it, it's the IBD 85 list. Basically, they look for the top stocks and the top industries. So we wanted to do the same thing. And before they came out on Friday morning, we wanted to be buying them Thursday afternoon. So this is why this was created and why it was adopted. I don't use it on my weekend review very much, so that tells you that other things perhaps have supplanted it. And I think that way every time until I use it. So just a very couple of brief comments about the options you see here, and we'll get further into this as we go on. You can pick the length of time that you're going to load, and again, it should really be based upon the speed of your computer. If you have a SSD and a new quad-core i7 4th generation, and you got 16 gigabytes of memory, go for it. But if you don't, it just takes time. And then you have to pick your relative strength type. So we tried to mimic O'Neill, and the one that most of us use is Ian's slow relative strength. And Ian's slow relative strength puts about 70% of the movement on the last 3 months and 30% movement on the 3 months before that. So it only looks at 6 months, which is plenty of time, and it heavier weights the last 3 months. The fast relative strength I haven't used in a decade, even more weighted the most recent weeks. Wilder RSI basically uses the Wilder relative strength and ranks it based upon that. Percent change would be over how many weeks you want to look at it. And comparative relative strength allows you to pick something to compare it to. So you might want to compare, and we'll do it tonight if I remember, the S&P 500, the stocks versus the S&P 500, and you can see which stocks are outperforming the index. The percent change, you may want to know 1 week, 2 weeks, or 3 weeks, 10 weeks, whatever you want to put in there, and I'll show you how I use that. Don't play much with velocity anymore. So there's three settings. You can look at relative strength, the velocity of relative strength, and the acceleration of relative strength. So I guess I'll use an analogy of the Indianapolis 500. If you took a snapshot of the top 10 cars at a given point in time, the highest relative strength would be the first one, the second would be the second highest, third one in the order of the cars would be the third highest. That would be relative strength. Now it may be that the 5th place car is faster now than the 1st place car, but it broke down earlier and it's a lap behind. Velocity is how fast they're moving at a given time. So if you rank them by velocity, you might find that the stock that's the group that's the highest relative strength has nowhere to go, and it's actually slowed down, while some of the stocks that are in the middle of the pack have actually at a faster speed. The third thing is acceleration, and that would be if I had 5 stocks at the same velocity, some might be slowing down, some might be going a steady speed, some might be accelerating, and therefore, I have the ability to find which one's accelerating, which one has the highest velocity, or which one has the highest relative strength. There's a lot of power there that we don't use. I will show you how I open this window up soon, George. It's easy to do once I get into the program. We will go over all this tonight. So here's the HGSI concept of the week, and it's one of my favorite concepts, and it's can I email the ranking module? I sent you I already put a PDF of the presentation in there, the report. I don't know how, let me think about that. I have a way to save that, but I'm not sure if that's what you want. HGSI concept of the week, HGS boxes. Let me show you the story here. If you've heard it before, if you are very limited in your time, you just want to make money, don't want to be that sexy, play the boxes. So the white slides tell you they're from Ian's deck. Ian's given me permission from time to time to use them. That's why it says RIRW. I don't know what Ian's middle name is, but obviously it starts with an R. And you can see this is a concept that is older than probably somebody on the phone, 1992. Actually, Joel, I think, is 24, 25 or older. So this is an ancient concept. And what Ian found out was that you could build a 9-box matrix. On the left-hand side, annual earnings average over the last 5 years. Across the top, last 2 quarters earnings percent growth. And then if you had a way to populate these boxes based upon the law of 72, a stock that's growing 100% a year or a stock, frankly, growing 72% a year should double in 1 year. A stock growing 25 to 50% annually should double in 2 years, and a stock growing 20 to 25% annually will double in 3 years. So basically, each of these boxes, 1, 2, 3, 4, 5, 6, and so on and so forth, can easily be populated by using HGSI. And I'm going to show you one of my favorite tricks tonight of how to populate them in about 3 clicks of your mouse. Now, box 10 used to be our mattress stuffers, and I'm not a box 10 sort of guy, as you can probably tell from the chat rooms where I talk about what I'm playing right now. And then box 11 is cash, which is a good place to be when you're uncertain of what the market's going to do. Another way of looking at it is if the column, this is annual earnings, last 2 quarters to those quarters a year ago, then this is the number of the box. And then I'll make my comments in a couple of minutes. Now, why would this matter? This is sort of where I keep my powder dry. At a top of a market, the boxes are somewhat meaningless to me. When a market is going to recover, the boxes are where I want to fish from. So at a bottom of a market, the boxes are what you want to be looking at. Now let me show you some data. Again, ancient history, who cares? It can't work anymore. Ian put together his boxes back in 1992, 93, and he used to talk about he was sitting there and watching the stock starting to hit new highs, and he knew that the market had turned around. I think we've got much more effective tools than looking to see new highs. And this was a move off the bottom, September 11th, 1992, into February 12th. Let's do the math. October, November, December, 5 months. And what he found was, based upon the box, that the biggest return, no shocker, were all comers in boxes 1, boxes 2, box 5 looked pretty good, and box 7. So he started to, build out an idea that coming off of a bottom, these high earning stocks might be leaders, and the boxes sort of categorize them by their growth. Now, my favorite is box 7, the turnaround box, because over my last 3 to 5 years, that's where I've made the most money. I have my own way of assessing a valuation, and you should too, because whenever you buy something, I'm not going to go to Best Buy and buy a DVD for $50 because they say it's $50 when it's worth $19. And I know it's $19 because I know the fundamental story about that thing. Well, I have my own way of how I look at price, and I'll probably talk about it at the meeting. And a lot of what I look at has earnings per share growth in it. And the stocks that have the most incredible earnings per share growth compared to the quarters a year ago are those that are coming out of the fire that are turning around, those that stubbed their toe. So we'll talk more about box 7. So that's interesting. Who cares? Here's 1998 and 1999. Here is October to November, 3 months. And you can see the performance on the box stocks. This is a whole box, not just the stocks that are listed. Some of the leaders are listed. And you can see out of 190 stocks, a 67% return in a 4-month period of time. All right, what about this century? There was a market bottom. Yep, Brad, I agree about beaten stocks are making their move in the NAS. There was a bottom in the market September 1st, 2010. So these reflect the boxes that were chosen and then closed out of 7 months later on April 29th, 2011. We should only be so lucky. Box 7 stocks were up 106%. Box 1 stocks were up 125. Even the box 9 stocks were up 50%. Now you might be wondering, well, Jeff, it was a great move. What was the S&P? S&P was up 24%. Wouldn't you rather do 4 times, 5 times the S&P? I would. In fact, here's a breakdown with the percent return by the box type versus the S&P 500 over the same time. Now, this was a special time. This was probably more exaggerated than most, but you know, it happens like this over and over again. June 23rd, 2013 was another low in the market last summer. The red is because some of these companies end up getting bought, which is fine. And you could see the stocks that made it into the list. In fact, I think HLKS may have been bought. I know they were on a tear. RGEN has done very well. Santoris got bought. The Home Brothers have come and they've gone. A lot of interesting stocks here. Jazz. So here we go. Boxes, June 23rd. Let's look at what happened starting the next day, June 24th to August 14th. So let's go 2 months in a summer rally. Now, it's a short one, and the leaders were actually box 4 and 5 at about 30%. How does that compare? The NASDAQ was up 10% during that time. So if you had just narrowed your list down to the box 8s, which was the worst performer, you would have done as well as the best performers. Had you, any of the other groups, or overall the boxes were up 16.43%. Now, I am a technician more than I am a fundamentalist. However, I am a whore when it comes to earnings. Yeah, probably a bad analogy to use. I'm a hog when it comes to earnings. I love earnings, and I set my pricing in my mind is very much tied to earnings. Now, that penalized me because I've made a whole lot more money on LinkedIn on the way down than I did on the way up, because I just from a fundamentalist perspective of lack of earnings, I had a hard time paying those prices. Now, reality is I made money on the downside on data, on Workaday, on LinkedIn, all these stocks, off and on Salesforce, because all these stocks got way inflated in price and may have looked okay technically, but when they fell, they had no earnings to support them. Not saying you have to buy earnings, but I like earnings. Now, one of the other things I wanted to do tonight is to show you how I use EdgeRater to call turns in the market or understand what's going on in the market. And one of the things that I can do is I can take snapshots. Now, I'm also a pack rat. No, I'm going to turn off my volume on the computer. Hold on. I'm a pack rat when it comes to saving things. So I have the entire database going back years. Unfortunately, it was until middle of 11, or middle of 12 rather, when I started capturing the boxes. But I've got relative strength and earnings per share rank. And what's really cool is I can do a snapshot using EdgeRater. And I said, well, what's been happening in May? And so I asked EdgeRater, I gave it a spreadsheet of the database of HGSI from the weekend preceding May 1st. So I had all the EPS ranks, the relative strength ranks, the group ranks, accumulation distribution letter, and the HGS boxes. So I had all of those, and they don't change on a daily basis. And then I basically ran the report for the last month. So interestingly, the high ERG stocks really outperformed. This was the year to date. So, Brad commented that what's been happening in the NASDAQ is that some beaten down leaders with good fundamentals have, this is it. Here's your LinkedIn, your Netflix, your Priceline, what else do I have? Google's been doing well for me. CMG has been doing well. So all of a sudden the market has changed. Now I don't know if this is going to last, but high ERG stocks, ERG being EPS plus relative strength plus group rank, the most it could be is 290, I guess 297. They haven't been leading the market year to date, but they have been the last month. Maybe this is a change. Over the year, I've said it several times, this year's been a funny year. EPS rank, maybe it matters. It doesn't really look like much to me. And for the first time over the last several months, and I think it's got to do with the comment of the rotation of the leaders out earlier, relative strength has not led to higher relative strength and not lead to bigger performance. That is extremely unusual. Group rank I ignore because the group rank changes over time. In a short period of time, one would expect the highest group rank stocks to have the highest performance, but over a year, group rank will rotate. This is also fascinating. I would expect during a good market that stocks that on May 30th had A and B accumulation to outperform the Ds and Es, and they are. Interestingly, from the year to date, which has been a really screwed up year, frankly, in many ways, utilities and REITs are leading the way as not a high growth stock guy kind of a market. You see that the stocks that ended December 30th, 2013 with distribution have actually outperformed the stocks that were accumulating. So I find this very interesting. And I actually look at this fairly frequently to get a sense. This is what I'm used to seeing. This is what happened in the market in 2013. A and B stocks at the end of December 2012 outperformed for the year. Box 1, 2, box 7 are up there. My favorite types of boxes outperformed for the year. Relative strength ranks certainly mattered. Interestingly, a lot of junk performed well last year. I mean, we saw that with the cheap stocks on a kind of a regular basis. And actually some of the highest ERG stocks didn't perform as well. Look over to the left, okay? These are the percent gain for the year. So even this guy here where my arrowhead is was still over 30% gain for the year. I think that there's a lot of stories here. Now, one of the reasons why this is important, and you're all coming in and you're believers, or else you wouldn't have been here before, or else you wouldn't come to my meeting. There was a time when Ian and Ron would say, buy highest relative strength stocks, buy highest ERG stocks. And the audience would say, but Ian, those are the stocks that ran up the most, why would they do well going forward? And one of the premises about high growth stocks and high momentum stocks is you buy high to go higher. Now, I kind of like buying pullbacks of high flyers to go higher, but that's just a variation. What this proved was stocks on December 30th of 2012 had the highest relative strength rank. It worked. They had the highest performance the next year. The other thing here is you see this gray line. There are very few stocks from my arrowhead to the right, so I ignore this tail anyways, and I probably should ignore this tail here, but there's no question that some of the junk actually had great returns last year. Plug, there's a number of stocks that I could go through that had ridiculous performance. Jose, I've been looking like this for about 3 or 4 years. This is typical, all right? Gradual increased return. If you cut out the bottom and you cut out the top, kind of like the Olympics, we're going to throw out the Russian score and the red China score, and just look at the other scores, you typically see a relatively persistent but modest slope up favoring the higher ERG stocks. That is typical. This is very typical. This, I'm going to have to go back in my archives and see. This surprised me for stocks with no relative strength to have that kind of return. Now, it may have been some of these represented high-flying IPOs, and also I recognize that the number of stocks were small. This disturbed me because it goes against my beliefs, and my belief is that earnings matter, but clearly in 2013, relative strength begot strength. Cool stuff. Now, do you need to have EdgeRater? This isn't even what I use EdgeRater for. I use EdgeRater nightly for a number of other analysis. This is like icing on the cake. We're going to have 3 outsiders at our meeting. Well, 1 outsider, 2 non-attendees, but participants. John Person, whom I think is a very smart guy who's been trading since the 80s, who's kind of my neighbor here. He's got some great books, is going to speak for an hour and a half or so on Sunday. Part of this is to give me a chance to capture my breath. Chris White of EdgeRater and George Roberts will be attending. That means Chris will have a discount on EdgeRater. And is it a necessity? No, I could do everything without EdgeRater, but it makes my life much easier. It would have taken me a weekend to construct this chart because I did it in the past. And EdgeRater, I use it for a lot of other things, as you'll see. One of our attendees said, you know, Jeff, if I add to the Dropbox filter the field date accessed, then you guys can know what's new. George, you don't see this because George would never do this. I was given a copy of Jesse Stein's book. It showed up magically in the Dropbox today. Please do not distribute it to other folks. These are the Think or Swim files that I mentioned. I put in the movie about my TradeStation indicator setup. I put in the number 2, last week's meeting or call, and I included some other mumbo jumbo for you as well. So tonight, let's go do it. Ranking module, power the right mouse, how I create the boxes, integrating EdgeRater, and then Q&A. So let me get rid of that, and let me leave this one on another computer so I can continue to make sure I do what I told you I was going to do. So first thing, under preferences, global index options. You pick what you want. I'm not sure what's best. I think that I want to look at market value weighted for this week and compare it with one of my other computers. Historically, I've always used equal dollar weighted, but that might be given too much credence to some of these $2 stocks that don't trade a lot of volume. Typically, I would go with 52 weeks. I'm playing around with 104. I don't think it makes a difference to anything except speed. And typically, I use the default filter. I'm trying the 2.5 and the 150,000. Cross my fingers I didn't screw this up. Okay. So that's it on the options. You can play with them. This deferred thing, play with it both ways. My problem with the deferred options is that every time I open up a new group, it calculates its index. And it's quick, and it cuts down a lot of time on the nightly updates, because why update things you don't use? But on the other hand, it interrupts the rest of my flow. Let me show you something else that I do. In the designer, and I have to resize everything. By the way, if anybody wants a high-end powerhouse computer that works great, except I've got too many. I've got a current model Dell XPS 15 with a high-res screen and a 512 SSD and 16 gigabytes of memory that I'm going to put on eBay unless somebody in the group wants it. Just email me offline if you have interest. I don't really do anything to the first two groups, but I go down in user groups. And let's say that I really could care less about the index from last webinar. Yeah, I don't care less. I'm curious, did we go up this week? So this would be the stocks that we did last week. I mean, who knows if we went up 1, 2, 3, 4, 5. Yeah, we've probably gone up a little bit this week. But I don't really care about that index. So if I right-click, whenever you right-click, you bring up lots of options. And that's, to me, part of the power of the right mouse click. And I go down here to Group Subfolder Index Options. And I put no index for group. I hit OK. And now it will never update that index. Why would I do that? Because I don't really care about that index, and it takes time. Now, that's obviously a small one, but imagine how long it would take to update every one of these things. It would take forever. So I have right-clicked, and it will say no index for the group. Before EdgeRater, this is how I built out my year in review, and it was a royal pain in the tuchus, which is Yiddish for tush, or something else you might call it. So let's go into the ranking module. So for those that wondered how I got the index, or not the index, but I got the settings. Okay, so the help is the same, is going to tell you about what the ranking module is, and it will also tell you how the relative strengths are calculated, Ian Fast, Wilder, percent change, so on and so forth. In fact, although I never give it enough to do, the help file within HGSI that George has put together is outstanding. No reason for me to have a filter here, but if I was silly and I forgot that I had a filter that said group index equals no, I'm going, crap, what happened to my groups? So that's why I made the comment, if it don't look right, take your index off, or your filter off, rather. All right. And any thing that you highlight, the first one's base metals, you can get, some basic information about what's in that group. Talk about that. Now, if I right-click, see all the options I get? I could go to change to index group. And what is it telling me? It's telling me it's ranking all the different stocks in that group. If I right-click again, I go back, I'm back to my 197. If I click on where the hand is holding the paper, I get my ranking options. So I'm going to talk a little bit how I use Ian Slow. Then I'm going to probably go to percent change and show you how I use that. So these are ranked via Ian Slow. Some of them are a surprise to me. I almost got to look at this as a chart. So I double-clicked on the steel producer index, and geez, snuck up on me. I'm not into any steel stocks right now. I haven't really found any steel stocks showing up on my screens. Now I got to go look at steel stocks. All right, so what has this told me? It's, well, Ron is much better at these things than I am. Oh, I think he uses, I don't know what he uses. But it's taken 3 months, 1, 2, 3. It's given it 70% weighting, 1, 2, 3, 30% weighting, and there's no question that despite the fact I don't see anybody talking about them anywhere, steel stocks have been leaders of late, or at least steel producers. Wow. And this isn't what this is, see, every time I look at this, I go, man, maybe I should be using this. Kind of a surprise to me, but this is the chart of steel producers. I don't think it matters whether I have 2 years or I have 6 months. Now, maybe some of this has to do with market weight versus, but I don't think so because this is the index. All right, well, I'm scratching my head and I'm interested. A lot of these look correct, so, all right, I'm learning. This is what, as I said, this is not the place where I typically play. I'm also surprised to see base metals. Now, it may be, again, that it has to do with market weight, but in fact, even though gold and silver have sewn off some of late, they did have a fairly nice run earlier in the year. So this is how the ranking module works. Now, I'm wondering, and that maybe I shouldn't have done this, but give me 1 second. Now, I'm going to look later. In fact, what I'll probably do, yeah, you're showing biofuels and semiconductors because I bet you're using the other ranking. As I said, I'm not sure what the right way of doing this is, and that's why I'm playing around with it, market weight versus price weight. So I will show you how I use this, then I'm going to re-index it and see if it looks any different. But I'm still a little bit surprised. Now, we all know utilities have been doing well. We know telecoms have been doing well. We know that REITs have been doing well. We know that midstream have been doing well. So it may have created a bit of an anomaly. However, everything else that says it's doing well is doing well. You know, it'd be interesting to see. It might be a fundamental of the market weight. Again, as I said earlier, I'm doing some testing of my own before the meeting. So this is relative strength where the number one, top percentile is ranked 99, and the bottom, that's interesting. All right. We don't have data. All right, I just figured out the problem. I am going to, The problem is we got the new industry groups. I may not have data back long enough. I'm going to stop the recording. So I'm not. That I like, there's one of the things. There are a number of things that I do every night in EdgeRater. So let me show you what they are. Now, last week, I actually showed you how I copy the list from HGSI into EdgeRater. So once I've done that, if I go into EdgeRater and symbol lists, I can see all kinds of lists of stocks that I've copied over. And they could be anything you want, as big or as little. And then to update them, one of the first things that I always do is I go to data provider and I tie it to HGSI. And then I've already done this, so I don't need to do it tonight. I highlight symbol list, I hit this, and even though I've got a zillion stocks in my list here, it doesn't take a long time. They'll all be updated. I know they're updated because I see the 29. So one of the things that we like to look at is the Hindenburg-Omen. And the Hindenburg-Omen is something that's in the literature, and Ian really drove it to a lot of people's minds. It's market top time. It's a signal that we, the small guys, are going all in when the professional guys are getting out. So there might be lots of volume, there might not be a lot of movement in the stock market, but you're shifting from strong hands to weak hands. And if you look at the major corrections over the last 50 years, all of them have occurred following a Hindenburg-Omen signal. Now, the problem is that only about 1 out of 4 signals is accurate, and it's usually not a single signal, it's a series of signals. So I've got my list of the NYSE stocks that we do the Hindi Omen on. I go into my Hindenburg Omen template. I go up here, I hit run, and in about 1 minute, it's going to tell me, because I've already run it tonight, that there is no signal today on the Hindenburg Omen. There's 3,000 or so stocks. It's churning through, and it'll be here in a second. Come on. You notice it's got a lot of preferreds and weird things in it, and it's going to give me a result. So to fire a Hindenburg Omen, the new highs and new lows both have to be above 2.2. Rising moving average on the NYSE. A McClellan less than 0, and the new highs can't be more than 2 times the new lows. All those hit, you get a Hindenburg Omen, and we haven't had a Hindenburg Omen in 2014. The last one I have is in December 2013, and there was a couple more. This one here in August, there was a pullback in the market that started in September and ran through November. Whether it had anything to do with the Omen or not, this is when I get nervous. The first one, I might stiffen my back. When I see a series of them, 1, 2, 3, 4 of them in 7 days, I get nervous, and it's often a sign that a market is going to correct. And you can see the spiders were about 170 when they started, and they ended up dropping down. Actually, that was 12. They didn't drop down, so this was a false signal. They didn't do much at 165. It doesn't really count. But there has not been a Hindi Omen this year. That makes me feel good. The next thing that I like to look at are the buckets. And I talk about these on my my weekend review, because I want to know how many stocks in the S&P 1500. So I got the 400 mid caps, 600 small caps, 500 large caps. I want to know how many of the S&P 1500 are above and below the Bollinger Bands, as well as the distribution within the different deciles, lowest 10%, next 10%, so on and so forth. And I'll show you a pattern. I wonder, so you can see here, this tells me a ton. It tells me that 3 out of 4 stocks are above the midline. That's a bull market. It also tells me that we have a lot of stocks getting near the top of the Bollinger Bands, but only 10% above it. Now, I don't have time to go back and find it, but about 6 weeks ago I did a study, and what that study showed me was when you get crowded in these 2 bars, the market probably goes sideways. It doesn't necessarily sell off. When you get crowded on the 2 bars to the red to the left, by crowded I mean up in the 20s and 30%, you're within 3 days of a reversal. And I could go back and I can look and get an ebb and flow that this market, you know, this is the 19th, you could see it was 50-50, and you can get an idea, gosh, here on the 15th, this is when deep doo-doo time, we had a bunch of stocks below the lower band, 68% to the left, and that was probably the low of this cycle. And it goes back and forth in different cycles. And all I'm doing is kicking the previous button. All right, here's when you know you got reversal coming. When you start to see this many stocks, this is probably when I did that analysis that we were getting, this is the day. We had 30% of the stocks trading below the lower Bollinger Band of the S&P 1500. If 450 stocks across the market are trading below the Bollinger Band and they spend only 5% of their life above and below the Bollinger Band, you know the market's going to recoil. And I think the next day we bounced, and 2 or 3 days later we have flipped over with a lot of green. So this is a great signal for me. Now the other thing that I'll do is, let me get you to where we are today. This is something new that I've been playing with. It's sort of a market strength meter for me. I might look at the NASDAQ 100. And what does this tell me? 85 versus 74. The NASDAQ 100, which was a laggard 2 weeks ago, talk about deep doo-doo from Gil, is at 85%. The NASDAQ 100 is getting overbought. And if you go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 2 weeks ago, 2-3 weeks ago, here you go. Here is when the NASDAQ 100, when they started, was ugly. What about high beta stocks? I can do the same thing. And these are another group that was in trouble, and they're also performing well. And I can go back. All right, this is, again, after the first week of May, we had a turnaround, and you could see that there was a divergence between these stocks, the NASDAQ 100 stocks, and the large stocks. And everybody was wondering whether the small stocks would pull the big stocks up or down, or the big stocks would pull the small stocks up. And the S&P obviously is still up, so everything has joined the S&P. I think this is incredibly powerful. We'll do more of this at the meeting, a market summary. Just hit run, and it gives me, I look at this bar here, and I can't get much, whoops, I hope I didn't just hang up. Somebody type a yes if you can still hear me. Okay. This gives me a summary of what the market is doing. This is the Woody indicator, percent B times BW. We'll talk about it at the meeting. I talk about it on every one of my weekend webinars. Green is good, red is bad, yellow is churn. And let me see if I can make this smaller. All right. So one of the things that really stood out to me this weekend was the length of this churn compared to the previous churns in the market. And it was just pretty clear that we've been in this way too long and that something was going to give. And I think we've seen over the last, since the 7th or 8th, what's given is the market has actually traded up. So I look at this as being rather healthy, and perhaps we've still got some more room in the market to go. And you could see kahunas in blue signal that the market was going to change. And so I look at this on a nightly basis. I know some of you are Gilmo fans. Code red, he talks, these will be your potential shorting candidates. Let's just look at the S&P 1500, make it faster. Hit run, and it's going to give you, are there any stocks that come to the top as potential shortable stocks from Gil and Chris. So I might look at some of these as stocks that are meeting their code red that Gil uses on his webinars. I'm still bullish in the market, so maybe I want to see the code blues. I hit the arrow. See, I'm killing time, but we're actually, I hope you're getting some value out of this. And here's my code blue signals, a lot more code blue. And I'm looking specifically at the ones that have kahunas. And you know, these are, gives you a shopping list. He talked about this one today. Talked some about some of the oils and gases today. There's a couple of them right there. I find that very useful. And those that are fans of what I do and George Lee does and David Elliott can go down and find the Canadian in the hat picture. There's George. And you could do the same thing. And if you're interested in stocks that are squeezing, that are giving signals of breaking out, and again, I'm only running the S&P 1500 here for speed, and you can see how fast it is. It gives you a list of all the stocks that are in a squeeze. Now I could look at a squeeze to the downside, and move to the downside or upside, and then I could go and look at all the stocks that are in a squeeze that have a PSAR reversal today, a mobile breakout, and a pocket pivot. And you could see a couple of interesting stocks that we may have talked about on certain webinars today, make it right up to the top. Here's a marijuana stock that some of you may be in. So it's a way of finding stocks to go look at and to make your night or life easier. And you can use it both to the upside or the downside. If you are a MACD divergence person, you can look for daily signals of a top with a MACD divergence. And you know, Chris will do much more justice to EdgeRater at the meeting, but it's a tool that really simplifies my life. And the ones that are coming to the top are stocks here that have evidence of a MACD divergence. And you know, as you learn more about these, there's more criteria that you're going to learn from them. So that could be a way of helping you find stocks for going long and short. Now the funny thing is, and then I'm going to hopefully be ready to go back to HGSI, yeah, we're almost there, is that none of this is why Chris created EdgeRater. He created EdgeRater to allow people to test different indicators, different signals, and to test them across groups of stocks to back test. Turns out it works great for that. It works even better as a market analysis tool. So I hope you see why, I think we should be done in a second, I do what I do from the perspective of EdgeRater. While I'm waiting for this to finish, any other questions that I haven't seen yet? Now, I mentioned that I save things all the time, and I also mentioned, oops, that's not what I wanted to save, the power of the right mouse click. So one of the things that I save on a regular basis, and I'm just going to not kill time but talk about it a little bit, is anything, and someone asked about sharing the ranking module, anything that you can see in a warehouse view, and I believe the ranking module are related to, excuse me, you can save as an HTML file. If you, I have so many indexes. If you save it as an HTML file, you can bring it in to a worksheet or an Excel spreadsheet. So for example, there's a guy on the HGSI board named Tim Higgett, and Tim Higgett once put up a filter that he thought was pretty good. I tested the filter. It's a great filter. And the Tim Higgett filter is picked up Micron this week. Now, I saved it, the worksheet, I saved my warehouse view as a XML or a HTML file, and then I imported it into Excel. At the end of the weekend, what I basically have is a compilation of all my favorite lists. And why is this important? Because I like to backtest. HGSI All, this is the database that I can feed into EdgeRater, and it has all 8,000 of the stocks, and it has things in it like EPS, relative strength, and if I go further to the right, it'll have boxes and other things in it as well. So to me, this HTML feature, took enough time to fit the program finish, but also is something that I find very useful. I'm going to stick next week's in there if I do one in the Dropbox. So somebody just asked the question, boy, that, paraphrasing, that took forever. Can I turn that off? Sure. I can go into global index options and use deferred index building, which means nothing gets built unless I need them. So now let's see what happens. I'm still intrigued by steel. And I opened the wrong one. Of course, that's ranking module. So I just got to make sure I'm in the right place. Here I go. All right, so now I've got what yours looks like. Now I got to tell you, I'm scratching my head on steel, and it has to be the market weight versus the price weighting. So this probably looks more like what we're used to, but I got to go find steel eventually. So under File, save as a text file. I can print it out as a text file, or say that I can save snapshot as a picture. So that's how you would have to share this. The warehouse has the save as HTML. I'll ask George if we can make that happen. So right now we're in relative strength. It's going to be 99 to 1. And so I like pictures. I like to see a group that was in disfavor for a long time. Then it got neutral, and now it's loved. If I right-click on that group, change to index group, these are the stocks that came right up to the top. Semiconductor manufacturing services, and those that watch the board know that Amcor has been a huge performer of late, and enough said. All right? So it might behoove you, always go right-click back, to find groups. All right, something's happening here. Mining services. It was in deep doo-doo. From January 3rd week, it was the 5th worst group. May 2nd, and now it's 96. Something is happening in mining services. Yes. So right-click. I don't know anything about this stock. Let's take a look. Well, obviously, based upon the last 3 months, this has been a home run from 21 to 30% move. I don't know much about this, and I'm still learning these new index groups. Midstream, This is one that turned a couple of weeks ago, and I think I highlighted it 3 weeks ago. Right-click. Phillips 66 has been one that's been on fire. So you could use this to see which are the leaders, but you could also be playing with colors and look at groups that might be rotating in. Cruise lines rotating in. Convenience stores were horrible. Now, this could be 1 week wonders, but this is group rotation by color. Now, if I go down to raw relative strength, and let me set this, I'm going to set percent change, number of weeks, 3 weeks. It's going to now rank these, whoops, by, this is actually, so this was raw relative strength, and now this was regular relative strength with, I'm sorry, I'm getting myself messed up on my computer here. This is using the 99, the ranking, the percentile. If I go to raw relative strength, it tells me the performance. Now, I set the performance on the index option for 3 weeks. I could set it at any week. Let's just look at 1 week performance. So last week, the leading group was computer peripherals that was up 8.9%. Semiconductors, 8.1%, biofuels, renewable energy, and so on and so forth. Biotech was up 3.9%. So I can look at it in multiple different ways. If I right-click on computer peripherals, change index group, whoops, cardinal sin, highlight, then right-click. These are the computer peripherals, and you can see it's really driven by synaptics. That was up 15.527%. So I can look at 1 week change. 1 week change is probably too little. I might look at 3 week change. And this tells me what's been working. Now, if I can look back a week ago, and I could see what was working last week. Whoops. Last week, the winner was mining services, other stone mining indexes, other mine mineral indexes. Something's going on with miners. This might be early evidence. So if I want to look at velocity, my guess is, let me go back to relative strength. My guess is that velocity, that the miners are going to probably look pretty good. So things that have gone from red to green, so miners, motion pictures, funeral homes, healthcare services, they should have good velocity because they're moving up on the race. So let's look at velocity. So biotech, that was a turnaround. We know that, great velocity. So the best velocity out there right now, here's your motion pictures, that velocity. Here's some of your mining velocity. So velocity might be, the first derivative of what's moving is relative strength. This is, well, if relative strength is what we care about, velocity is the first derivative, and this tells you which are the ones that are speeding up. So these should, I would think, correlate with stocks that are going from stocks that are going from right to left should have the highest velocity. These were near the top. Biotech was a 27 and it went to an 86. Now those of you who like biotech stocks like myself know how crappy biotech was March, end of March, April. Something's happened the last couple of weeks. Biotech are on fire. So, I'm not the best at the ranking module. And as I said before, I probably don't use it enough. but boy, is this thing powerful. So what I could do then is go through the biofuels, right-click, change index group. And now this shows me within that group, if I believe in relative strength, these are the top relative strength stocks. And we know that this had pulled back, and now it's moving back up. PEIX, MGPI, REX, don't know Solazyme. So I'm hoping that you're seeing, I'm certainly seeing, that there are a lot of ways to skin a cat, and that maybe we need to start using this module a whole lot more. Let me go, this is 1 week performance, so I got to go back into the options, and let me go back into E and slow. And this is what you're going to probably see. So I hope, and I know this isn't as smooth as I would have liked it to be because I shouldn't have played with my options before I figured them out. But bottom line is this is another tool that allows you to rank the industry groups by relative strength. It allows you to mine the groups by clicking on them. I'm interested in convenience stores. They've had a big move, change index group. Well, this one's been strong all year. Hello. This must be a buyout. But it allows you to top-down invest a way entirely different than what I show you on my weekend reviews because I like it a different way. But I hope you can see the power here. You might say, all right, let's look at the MarketSmith 250. Let's not look at indexes, let's look at stocks. So right now, in the MarketSmith 250, these are the stocks that have the highest recent performance. If I go back here and I'm going to make relative strength just be percent change 1 week, that might be interesting, and go down to raw relative strength, you could see within the last week what's really moving. A lot of things that you're probably very familiar with. So I'm looking for questions. Now, for those of you that are nervous, because gosh, there's so much stuff here, Jeff, how will we keep up with you? I'm still learning. You don't stop learning. So I talked about the right click. The right click gives you a lot of different things that you can do. If I'm in the warehouse view, I can use the file to find these things, and this is how I save it. Save as HTML, and that saves what's in my warehouse view. Or I can right-click, and I can change to the industry group. So that was actually pretty good. Let's say that I want to do some prospecting, and I'm going to go into all securities. And within all securities, and I'm going to use a scorecard, 2.5 and 150 is just one that I like to search with. So the scorecard is and you can use whatever you want. Oh yeah, the rank. I'm glad somebody just put the issue about the boxes. I promised you that one. I'm not done yet. These might be the stocks that come to the top. Actually, let's use a 2-day force. Let's get things that are moving now. So this is 2-day force. These are the stocks that are moving the most. Twitter, Gil's all over that one. Netflix, this is my big winner the last 3 or 4 weeks. Facebook's moving. These are obviously the big winners right now. If I right-click, Hillshire Bands is a buyout. Let's say I'm interested in Palo Alto Networks, but I'm kind of curious, is there any, they had good earnings. Maybe there's something else in their group that I should be looking at. I right-click, change to industry group. These are the other things in their industry group. So I can now see what's next. Splunk. Now, I'm not saying that I would buy Splunk, but here's Palo Alto. About a week ago, earnings came out. Here's Palo Alto today. I'm not sure I'm ready for Splunk, but Splunk looks like Palo Alto did. All right, someone said they missed and the earnings are going to drop down. That's why earnings matter. But the point here is you can go through the group and you can see if there are other things that look interesting. Here's how you create the boxes very quickly. So I am going to start in my warehouse view. This is, to me, is actually exciting. I'm going to go in my warehouse view under all securities. And I'm going to go with my $2.50 and 150,000 shares. So I'm limiting the universe to $2.50 and 150,000 shares. I'm going to make a group from this, and that group is going to end up in my user group. So we're going to call it South Florida Box Start. All right. So now this is automatically going to change to that group, I hope. I don't care about an index. Okay. So now I'm going to go into some of the hidden secrets of HGSI. This is called the Spectrum Analyzer, and it can take whatever in the warehouse view and do all kinds of neat separators. It can separate it by industry. Pretty much it can separate it by anything that you can search for, filters, etc. Then there's the secret slices, which if you don't have, you'll get from me. I open up here. Whoops, that's not where I open up. Custom slicing options. And there's one called 9-box matrix rule of 72. Now all right, there it is. So look, so here's all the different custom slicing options. So this will slice them by accumulation distribution rank, by Bollinger %B, force things, or you can find the one that's called 9-box matrix. I'm going to hit open. So what it's now done is it's taken my 3,354 stocks, of which 625 meet the required earnings per share. Remember, 5 years of earnings is a long time. Requirements to become a box stock. And it's automatically divided them up by box. So it could be good if all you did now is you started writing this down. Nah, too much work. All you got to do is go here where it says make group from slices. Create the group. We're going to put it in the South Florida Box Start. And here it is, HGS Box 5.29.2014. I'm going to hit OK, go have a cup of coffee. And I'm kidding when I said that about having a cup of coffee, because it'll be done before I have a chance to take 2 gulps. It's now done. And now I'm going to show you some magic. Here's the direct we just created. And there you go, folks. You got your own boxes. Now, is that cool or what? You want to prospect where stocks are going up? This is where automatically build your boxes. In an extended market that's topping, this is not necessarily where I want to fish from, because these stocks go up like a rocket ship and they come down like a boulder. But when this market pulls back and bases and everybody's ready to kill themselves because we're in a real correction, and you start to see life in the market, make your boxes and go to town, because that's when the boxes are cool. Now, I think this program is amazing of what it can do. I've touched the surface once again. We are at an hour and a half, which is about minus 5 minutes for my screw up. I'll see if there's any questions. You can do whatever you want to do in combining filters with the boxes. You could have taken, well, let's do this. I'm trying to think what I want to do. Oh, okay. I'm going to do one more set, because you'll get I think it helps to see what I do so you can emulate. I'm going to start with all securities, but now I'm going to filter them. Let me pick what filter I want. All right. I just don't know if I'm going to have enough stocks. So this is a filter that was trying to front run O'Neill's IBD, used to be the IBD 100. And then he realized it's hard to have 100 good stocks. It's a lot easier to have 50. And now it's the IBD 50. So I've taken a filter. It's called the O'Neill stocks. These are IBD-like 50 stocks. They have to be above 50, $15. So now I'm going to create, I don't know if this is going to work. I'm going to try it. I'm going to do a make group from list, and I'm going to go back, and I'm going to call it O'Neill filter box list. So it creates the list. I don't want an index, so when it comes up, I'm going to say no. I'm going to change to it. Okay, my 342 stocks. I'm going to go to the spectrum analyzer. It's already set there. Now I'm going to go hit, it's already set on the HGS boxes. I'm going to make the boxes from the list. I'm going to put it under O'Neill. O'Neill 5 box. I'm going to hit OK. I'm going to think about having a coffee, and it's going to do its thing. And I bet now I can now go and I could do some analysis and see whether or not these are the best of best. Now, guys, you all trade. Are these not the stocks that you want to be owning right now? Again, market's extended. Market's going to roll over eventually, but these are the leaders because they got great earnings. So, all right, let's see what else can I do. Could you display box 7 again? Do a couple different things. So these were the box 7 stocks. What these stocks have in common is that they've all stubbed their toes on earnings. So I'm going to pick one. I'm going to pick Micron Technology. Why is this a box 7 stock? In the fundamentals, in the fundamentals of our charting program, I've got 2 years of revenue and earnings. I have the amount and then the comparison to the prior year same quarter. Okay? So what do I have here? I got big positive numbers and minus numbers. This guy stubbed its toes and it turned around. It's a box 7. I can look at Supermicro Computer and it stubbed its toes and turned around. I can look at Cavium. We were talking about that today in Gilmo. stubbed its toes and turned around. They're all the same. They all have stubbed their toes from an earnings perspective. This one must be further to the left. And then they started growing again. Box 7 is a place to find turnarounds. So I think I've answered most of the questions. Let me just go through them again. You can't tell I really love this stuff. And I can't wait to share the little that I know with you at our meeting that's coming up. I'm sorry that I have to charge for the spouses at the dinner, but as some of you know, I don't do this to make money, but I don't do it to lose money either. Here's a good question. Our earnings report, and I won't even cover my costs, but it also makes it so you don't have to feel guilty for bringing your wife. I'm also going to see how many of you are bringing your spouse, and there's some great museums, there's some great nature centers. I don't think my wife will have the guts to take you out the wives out on a boat, but we'll see if my wife and George's wife might be, Robert's wife might be able to put together some wife functions. Are earnings the same as MarketSmith? No. I can't comment on that. I use MarketSmith because MarketSmith gets earnings going back more years. As you know, the earnings may vary, GAAP or non-GAAP. They may include or exclude things, and I don't know if the source are the same. I believe the earnings are what comes out of bar chart, and I also blew it last meeting. It's Bloomberg, not Morningstar. If I said Morningstar again, I apologize. I got to stop thinking that. Bloomberg is the source of the industry. George will be there, and he can go over some of his reasons for picking his sources. Yes, they have a very nice pool and spa, so I'm sure many wives will be there. All right, I think I've gotten the questions. I hope you're getting excited. I'm certainly excited. This is an amazing program, and you don't have to be a Ferrari to get from A to B. You can get there with a lot less horsepower. So you'll learn to become a Ferrari, but you'll leave my meeting with the ability to do a lot more than you came in. We'll see you all next week. Look for things to show up in the Dropbox. I'm going to start bearing you with some free stuff. Bye, everybody.